Hello and welcome to the Citigold and Citigold Private Client webinar. I'm Paul Hodes, the Wealth Management Head for Asia, Europe, and the Middle East for Citibank. And we're here today to talk about the US presidential election and US-China relations and what the outcome of that, what's the potential outcome for the global economy and investment markets. I'm welcome our clients joining us on this webinar from Singapore International Personal Banking, Australia, Malaysia, Thailand, Indonesia, India, Bahrain, United Arab Emirates, Philippines, Russia, the United Kingdom, and Vietnam. And simultaneously, we're going Facebook Live, and so welcome if you joined us from Facebook Live out of the United Kingdom, Hong Kong, Korea, Bahrain, United Arab Emirates, and Taiwan. Joining us today, we've got the Honorable Kevin Rudd. Mr. Rudd is the former Prime Minister of Australia and currently the President of the Asia Society Policy Institute. And Mr. Rudd joins us from Queensland, Australia. Good afternoon or good evening, Mr. Rudd. Thank you for joining us.
Good evening from Australia and greetings to everyone around the world.
Thank you very much. In addition, we have Ken Pang out of Hong Kong, who is the Citi Private Bank Head of Asia Investment Strategy. Good afternoon, Ken.
Good evening. Thank you for having me.
Thank you so much for joining. And I'm here in Singapore. So I guess to kick off, 2020 has been a tumultuous year. Around the world, we've seen a global health pandemic that's certainly been the worst in more than 100 years. That pandemic impacting the global economy, driving a drop in major economies in the US and Western Europe and Asia, and impacting things like unemployment to the highest rates out of the US since the 1930s. And at the tail end of the year, we've got a number of different events coming through, and probably the largest one from a geopolitical situation is the US presidential elections happening in November. And so I guess first off the bat, when we look at the US presidential election polls, you can see that right now, former Vice President Joseph Biden leads President Trump by 9 percentage points, and has been President Trump has been trailing in the U.S. election polls for the year. I guess there are questions in terms of the strength of the polls, given that the polls in the last U.S. presidential election really misjudged the final outcome. And so I guess, Mr. Rudd, in your view in terms of the U.S. presidential election, one, do you believe that that we can have more faith in the polls this year, or is the likely outcome potentially going to vary as much as it did during the last presidential elections?
One of the hazards of politics, whether it's Australian politics or American presidential politics, is that we usually base our projections for the next election on the one we had for the last election. And the unfortunate nature of the beast called democracy is it's always a little different. Therefore, I understand the reservation of many when they point to how the polls, quote, got it wrong last time round. Actually, the polls didn't get it wrong last time round. They actually predicted the voter aggregates across the United States. They predicted that Hillary would end up with 2 or 3 million more votes than Trump. But where we fell short was where that would fall precisely in terms of electoral college votes. Now, this time round, if you look at the United States and you look at the particular swing states of concern, states like Pennsylvania, etc., what is interesting at this stage, and we're a month or two out from the election, and voting has already started in terms of absentee and postal ballots, is that in most of the swing states, you see the average of the polls indicating that Vice President Biden is ahead. Certainly, if you're a betting man, and everyone from Australia is a betting man, then you would look at these numbers and suggest that on the balance of probabilities, it is likely that Vice President Biden will prevail. But that leaves to one side what you in the United States famously describe as the October surprise.
Thank you. And this year will be unique in a number of different ways, but in this election, write-in ballots out of the US, the estimation during the last election was represented something like 20% of the votes. And in this election, there's forecasts, given the COVID-19 situation out of the US, that upwards of 70% or even more of the votes may be write-in. Is there a sense that write-in ballots, that voters on write-in may vote differently, but certainly the timing to collect and count those ballots would be different? So the announcement cycle, which typically happens overnight in the US, or at the very end of the evening, that there may be some delay in terms of the announcement. What do you think in terms of the impact in terms of write-in ballots?
Well, here I can only project on the basis of what happens with Australian postal votes. And the bottom line is, because voting has already been made possible in the United States, in terms of your write-in ballots as you describe them, the way in which those ballots are filled out will tend to reflect, obviously, the polling data as it presents itself today and in the effluxion of time between now and the actual voting day in November. That's one thing to bear in mind. In other words, a large number of votes will depend on the evolution of the political climate and the relative positioning of the two candidates between now and November. The second is the point that you specifically draw in your question, which is the counting factor. Now, if the system in the United States, which I believe it is the counting of write-in ballots does not get formally underway until all ballots are, or all normal ballots are closed on voting day itself, then you are going to see a considerable delay. And therefore, given some of the more arcane voter count practices which occur in some parts of the United States and some states of the United States, given the long historical memory you've all got of hanging chads in the year 2000 election in the state of Florida, then it's likely you're going to see some delay. So therefore, people whose analysis I trust in the United States would point to the probability that unless it's a complete slam dunk for Joe Biden on voting night itself, through the votes cast during the day of the voting process, then when President Trump threatens to challenge the result and not to either concede defeat or claim victory on on voting day itself, I think that's credible. It's also credible given his statements challenging the validity of write-in ballots themselves, that he will use that as a basis of challenging the fairness and the accuracy of the count to the Supreme Court or to various state courts in the first instance. So we are likely, I think, to, and we should factor in the probability that we're going to have an untidy process, both of counting and of legal challenges, for some days and possibly weeks following voting day.
So potential, if former Vice President Joseph Biden wins, a potential stumbling in terms of the transfer of power that has really never occurred in the US before. So there's a potential risk there, creating some, not only political, but potentially economic or volatility in the short term.
Well, both our Chinese and Russian friends will be delighted if the credibility of the democratic system as applied in the United States comes under global scrutiny. That is, if we in the West and the Asian democracies trumpet the virtues of democracy and the democracy fails to perform on this critical day, 1 in 4 years for a presidential election. And then you can understand the chorus of observations and criticisms and complaints which will come from authoritarian states around the world. But to be realistic about it, given what President Trump has said, given the fact that you don't have a unified national voter counting system in the United States, that it is controlled by each of the 50 states of the Union, then I think on the balance of probability, you're going to end up in a sea of legal challenges which will take some time to resolve.
Understood. And Joe Biden has gone to the election on a platform of potentially including things like raising taxes on capital gains as ordinary income, raising the top income tax bracket and corporate tax rates, investing $2 trillion for green infrastructure over the year, for the next 4 years, and a real focus on climate change, investing for climate change, and as well as reopen the Affordable Health Care Act, and potentially lowering the Medicaid age from 65 to 60. So given that platform, and if he does take office, then we should be seeing some significant changes then in the economy, and then potentially as investors are viewing underlying stocks for the and sectors for those markets. Is that right?
Well, there are many economic and financial imponderables arising from the US presidential election. One of which is what happens with the long-term management of the United States fiscal balance. And we know for a period of time, at least up until the 2016 election, restoring the budget to balance, consistent with the economic and business cycle, was one of the axioms of US politics and of US, let's say, bipartisan economic and financial policy. But we've had 4 years of relative fiscal profligance from the Trump administration, huge tax cuts on the one hand, large spending increases in the other, particularly on the US military. And then you enter into the possibility of Vice President Biden being elected, where we've seen the revenue side of the United States budget continue to collapse for reasons consistent across the world, namely the COVID-induced global recession. But at the same time, a large number of spending promises coming through. So a key macroeconomic uncertainty, macro financial certainty, will be the long-term financing of the US budget deficit. I park that one there. Secondly, going again to your question, I think given the absolute centrality of climate change action to the Joe Biden agenda, and given where the membership of the Democratic Party and its voter support comes from, if the vice president is elected, I believe you will see a very large-scale set of actions by the administration, both in relation to carbon on the one hand, but significant investments in terms of renewable energy on the other. And I believe this is now not marginal to the Democrats' overall set of policy priorities. It's central. And therefore, far be it from me to provide any of your participants in the webinar with investment advice, but I think being very mindful of the fact that this will become a central piece of administration policy for the following 4 years is the one thing people need to embed in their cerebral cortex.
Thank you very much, Mr. Rudd. Just to say to our customers who are viewing us, thank you again for viewing us on your webinar. Please do send questions in for us. We'll be able to ask Mr. Rudd as well as Ken Pang your questions at the end of the webinar. Ken, so given what Mr. Rudd said about the potential outcome from the elections and how the Trump administration has invested its money, and the potential way that if the former Vice President Joseph Biden wins the election, how he potentially would focus government spending, as well as how he would potentially implement taxes. What's the city view on the two outcomes, whether President Trump gets reelected or former Vice President Joseph Biden becomes elected as the new president? Sorry. So I think we've.
Sorry, I forgot to unmute myself. So
it's good to hear you.
There we go. Thanks. So in the short term, we're seeing market volatility, and And I think a lot of that has to do with the uncertainty about when we're going to find out the result, right? As Mr. Rudd was just talking about, there are many layers of uncertainties there. But just looking at presidential elections in history, the market performance before elections tends to be more volatile and weaker. But after elections, whether almost regardless of what the result is, market performance improves because of the removal of that uncertainty. At this moment, we are kind of struggling to come to start a new business cycle. The recovery is taking place. Pandemic is coming and going, but there's not going to be more shutdowns like we experienced in April, May. So by next January, by then, I hope we will have this result. I think the market will be going to focus on recovery again, and I think that will happen regardless of who wins. Now,
and Ken, can I ask you? Sorry, Ken, can I ask you? Given that the two candidates and their platforms are so different out of the United States, how should investors be looking at their portfolios now in anticipation that either one could become the president and during this period, as you mentioned, during this period of volatility until after the presidential election is over and fully counted?
Sure. So I think this period of volatility is when we should consider to perhaps add to our positions, add to our exposure to recovery, rather than completely shun away, because this is likely to be an opportunity. Now, the two gentlemen have very different policy agenda. I think in the event of a Trump win, re-election, you're probably going to see more of the same. Basically, he's not going to raise taxes, but he's not going to be able to cut taxes either because Congress is not on his side. He's likely to focus particularly on national security and still would have the go at it alone, America first type of attitude. And so that's probably going to bring more pressure on the U.S.-China relationship, and that's probably going to be negative for market sentiment. But again, regardless of who wins, I think that the first year of this next administration is going to be focusing on economic recovery, and I think on that front, Joe Biden probably has a significant advantage because he is likely to have the support of Congress, right? So if in the event of a Democratic sweep, you're probably going to see the next stimulus package come out pretty quickly. You're probably also going to see a very significant infrastructure program, something that probably is going to be very difficult for a Trump administration. So that means the industrial sector. That means tech sector actually would benefit because the infrastructure, a lot of it will have to be tech enabled. Clean energy, right? Mr. Rudd said it very clearly. This is going to be a top agenda for the for a potential Biden administration. What that means is shale oil production is likely to be curbed to some extent. That if that reduces overall U.S. output, U.S. supply, then that's going to be a positive on oil prices globally. So for producers outside of the U.S., this is actually going to be a net positive. And of course, for alternative energy producers, for battery makers, for the supply chain, all the materials that go into batteries, these are going to be sectors that are likely to benefit substantially from a Biden administration. And again, the Affordable Care Act, right? If Biden administration moves towards universal health care, I think that's going to have mixed effects, right? First of all, the private health insurance companies likely to get hurt by this, but pharmaceuticals and particularly generics are likely to benefit from this. And finally, about tech, right? So there's a lot of fear that the Democratic government might have antitrust legislation or have a tax on tech. That's possible, but I think that would hurt the large players much more and might benefit the small tech players by encouraging more competition. So I think it's going to be a fairly different impact depending on the sector, and I think that the market will probably be moving in that direction as the result becomes clear.
Thank you very much. In fact, I'm getting many questions coming through right now from clients just on what you've said. So we'll be coming back to that. Thank you. Thank you very much, Ken. Mr. Rudd, I guess moving to the U.S.-China relations and sort of the tensions between the U.S. and China, both in terms of geopolitical, the tensions over Hong Kong and the recent Hong Kong new law in Hong Kong, out of tensions between China and Taiwan, and also in the shipping lanes in South China Sea. In addition, concerns over Chinese technology raised by the U.S. government and data security from that. And then certainly the year started out with encouraging news on trade relationships between the U.S. and China on January 15th for the Phase 1 deal, with China agreeing to increase purchases of U.S. products and services by at least $200 billion over the next 2 years. Now, China hasn't been in response, the U.S. lowering trade tariffs by half down to 7.5%. China hasn't been able to deliver to the promised $200 billion over 2 years in the current pace, and there's risk against that. And being in the middle of this U.S. presidential election, which is quite contentious. What do you see as potentially could trigger an unraveling of Phase 1? So one, in your mind, do you think that the trade agreements are solid between the U.S. and China, regardless of who becomes president for the next term? And secondly, do you think there's risk of those trade agreements unraveling?
Well, I remember attending the White House signing ceremony in January for the Phase 1 deal, and scratching my head and asking myself the question, the very, very early days of the COVID outbreak in China, how long all this would last. So far, remarkably, here we are in September of 2020, a deal which is now 9 months old, technically and substantively, it has held reasonably well so far. I think that tells us a number of things, that China is keen to preserve this element of normality in the US-China economic relationship, while recognizing, at least from Beijing's perspective, that there is going to be a significant and continuing decoupling occur between China and the United States in elements of trade, in elements of technology, and possibly in elements of financial markets as well. And you begin to see those Chinese countermeasures or preparatory measures being put into place. Secondly, your question is, though, will it hold through until after the presidential election? Let's just say if there's a change in administration. 2 points to add there quickly. One, if the polls continue to head south for President Trump between now and voting day in the United States, that is actual election day, then there is some suggestion inside the Beltway in Washington that the president himself, that's President Trump, may pull the pin on the US-China trade deal and say, not good enough, not being implemented, time to be even tougher on China, to garner his domestic political support in the rundown to voting day. I do not have definitive advice as to whether that's going to occur or not, but it is certainly an option. The second point I'd make is that if Vice President Biden wins, I do not see any evidence that the incoming Democrat administration would be seen to be adopting any more conciliatory approach to the Chinese based on the deal that's already in place. That would be lethal politics so early in a Biden administration. I think it's more likely to be, therefore, if the agreement still exists at that point, to be sustained at least into the first year of a Biden administration.
Thank you, Mr. Rudd. Ken, I've actually, just on this related topic, I've got a question from a client, and this one is out of Malaysia. The client was asking, given the trade deal risks between the U.S. and China, and but on the other side, China's rebound in the GDP, so China, is in positive GDP growth in Q3 and Q4. I think our view is about 5.5% in Q3, growing to 6.3, while the U.S. is in negative GDP for this quarter, negative 3.7, improving slightly in Q4 to negative 2.1, but U.S. rebounding 5% next year. So I guess the question is from the client is, Citi's views has been for quite some time is overweight Asia. Given the economic power and economic rebound of China, is Citi still overweight China or Asia, Greater Asia? And does this trade deal, or the potential impact to the trade deal, have any impact on Citi's views for investors looking into Asia?
Okay, so the view on all right. So China has outperformed this year because there's a large segment of that equity market that is tech, right? And they were net beneficiaries from COVID, right? So we were overweight for that, and it paid off well. Now moving forward, let's assume that the trade tensions between U.S. get worse, right? Because if it gets better, then it should be better. But let's assume that it gets worse. You notice that since 2018, the first year of the trade war, the Chinese equity correction was the sharpest, right? Some 30-some-odd%. By 2019, that correction has been cut down by a half, so a bit more, I think about 16%. And then in 2020, basically you didn't have any real market reaction to the continuous worsening of the bilateral relationship, right? There was no new tariffs, but there were Hong Kong issues, Taiwan issues, South China Sea issues. There are a lot of things going on, all these sanctions, and so what we're thinking is that the marginal impact of additional economic tensions is going to continue to shrink, right? As we move forward in this relationship, right? Companies have gotten used to things. They've found alternatives to their supply chains. They've found alternative markets. So I think the U.S. and China.
Sorry, Ken.
Yeah.
So if I can, then is Citi's view still overweight in terms of Asian equities? And given the economic rebound this year of China and Asian economies, and as you said, a lessening impact on the trade issues going forward with Asian economies, as our investors are looking in terms of rebalancing their portfolios, how should Asia play a part? You talked about the strength in technology out of Chinese technology firms, so far this year. How should clients be looking at their portoslios?
Yeah, actually, Asian development, Asian growth is an unstoppable trend that we have been talking about over the past couple of years, and we remain convicted to that view. Maybe slight twists recently is that we think Southeast Asia is likely to be a greater beneficiary of reopening and recovery in terms of the business cycle, and they're also likely to be net beneficiaries from continued tensions between U.S. and China, as more supply chains move from China to these countries, to Southeast Asia, so that they can serve both markets, right? So I think this is a long-term trend, and we think Southeast Asia are likely to benefit more, and so we want our investors and clients to take a look at that market more carefully, since they haven't really been a major part of a lot of portfolios.
Excellent. Thank you very much. It's been an excellent conversation. We've come to the end of our time. For the follow-up questions, please, if you, your Citibank, Citigold, and Citigold Private Client Relationship Manager would be happy to speak with you about some of the trends we were discussing today and the potential impact on your portfolios. And so I'd like to thank our clients for joining us today, as well as visitors on Facebook Live. And special thanks to Mr. Kevin Rudd, for joining us from Australia, and Ken Pang from Hong Kong. Thank you both very much. It was a really insightful conversation today and very thought-provoking. Thank you very much.
Thank you. Good evening.
Have a good evening. Thank you.